Stephen Jamie with you today on football and TV production, we like to call it, and it's Monday Madness. It's the 13th of June. Welcome. How are you doing, Jamie?
Yeah, all good, thanks, Steve. All good. Had a nice, relaxing weekend and flicked on the markets this morning, and there seems to be a fair bit to talk about already for this week. So we'll get stuck right into it.
Lots and lots to talk about. A lot of follow through from Friday's mayhem, and so yeah, we're going to get stuck straight into it. Let's take a look at the news headlines, really, as we see it, and the obviously market shocked at markets are shocked. I wasn't very shocked as the US inflation hit a 40-year high. We saw US consumer prices increase 1% for May compared with a forecast of 0.7%. Doesn't sound like an awful lot, but these numbers do add up. Year-on-year rating was 8.6%, so significantly above consensus. The Fed fears increase again following the inflation data. There was a fresh shift in Federal Reserve pricing, with markets pricing in 150 basis points. That's 1.5% in real language for the next 3 Fed meetings. And there's also speculation there would be a more aggressive 75 basis point increase at next week's policy meeting. Now that would be a bit of a cat amongst the pigeons. So 10 years surged to multi-year highs, we'll call it, to a 3-year high. 3.2% the 10-year got up to, and the 2-year also increased to 3% for the first time since 2008. So, moves we haven't seen in 14 years. This continued on Friday. The bad news continued. University of Michigan Consumer Confidence Index dropped sharply to 50.2. That was expected to come out of 58. The previous month was 58.4. This led to Wall Street collapsing, based on the more aggressive rate tightening that's expected now. S&P index declined 2.9% and 3.5% in the Nasdaq. That really helped out with my gun to head challenge. Jamie did smashed it as well on his gun to head challenge, going short of Nikkei. Yen posted fresh 20-year lows. Chief Cabinet Secretary Matsuno stated that yen weakness was a concern. Japan was ready to respond as appropriate. So looking for sort of currency movements over there. Nothing yet so far, though, as dollar yen hit fresh 20-year highs above 135 before it dipped to 134.60. Canadian unemployment edged lower to 5.1% from 5.2%. And UK economy finally recorded a 0.3 decline for April compared with expectations of a slight increase for the month, and the second successive decline, with industrial production dipping 0.6 on the month. So that's pretty much it. I think we're going to dive straight into the charts, and we're going to take a look at Bitcoin. Now, Bitcoin has broken the level, the Steve O'Hare level, the level that he has been talking about and boring us with for months and months and months and months. So 28,800. Let me get the weekly chart up, try and show you it a bit clearer.
Yeah, look at
that. Yeah, smash through it and close through it, and yeah, that's pretty much done and dusted then. Isn't that over now? Or what? I don't know where to go from here. It's something that I've been concerned about for a long time, and also what we'll do, we'll bring the I don't know if I've got the volume. Let me get it up. The volume indicator on here. What's it come under, Jamie? Do you know? Is it visible range? Yeah, something like that.
Cool.
That'll do. Let's bring a little bit more into it. So we can see most of the volume range took place a long time ago. We've been playing above this 20,000. Well, not playing, obviously. There's been a lot going on. But we built up a volume profile above the 30,000 level for a long, long time, since December 2020. So we actually had this week the lowest close since then. So that's pretty decent sign. Now, what we have got, which is a real concern, is we'll show you that. Well, that's as far as it goes. So we've got this sort of vacuum level between here and 20,000. So I don't think cryptocurrencies will hang about here for long. Now, that could mean two things. We're going to absolutely slice through this over the next week or so, and then we're going to enter back into real bear mode below 20,000. There's a little bit of me now, because I've called this for so long, thinking, what next, Stevie? You've got to say what next. So there is obviously, Bitcoin isn't like other markets. It's a very, as far as I'm concerned, it's a very long only market where we're investors. There's no real a need for that hedging that like there is in other markets on the sell side. So all we need is a big whale to come in and try and support it. But I think that's what they've been doing around about the 28,800. So I think we should be hitting 20,000 in the not too distant future, I think within 1 or 2 weeks. So look out for that. If it really, prices need to get back above 33,000 to sort of stave off this this negativity that we're seeing in the markets. Take a look at the daily chart to try and get a little bit more of what's going on here. Since we broke from this from the 37,800 level, we've sort of like just been under the cosh ever since. So we've actually got back below the 12th of May swing spike low, and we're trading there now. So interesting level to trade. As I say, I think we've got some measured move targets go way below zero. So I don't want to show you that. I'm not saying this is going to zero, but I'm just saying that this is starting to realize its true potential, which is a lot less than where it is now. What do you think, Jamie?
I do agree. I think I was having a little scan through some of the altcoins this morning. I don't know if you want to quickly pull up. Litecoin is one I seem to look at most days, and that took really the biggest hit I've seen out of all of them today. I'm not sure. Yeah, LTC USD. It I had to do a double take actually, because when I checked this morning it was down 22%. I'm not sure it's still struggling as much, but we were looking to get short of this all of last week, and the move seemed to happen over the weekend. But I can't quite see the numbers there. What's it down to? Is it
44, 45?
Yeah, so that's really fallen off a cliff. It was trading around 60.59 last week. So
I mean, the big ones like Ethereum, that's shown you the level we were talking about. The level, the 1730 support was holding there for such a long time, and then bang, 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 3 days, and it's gone, and it's back down to lows from the. It still has it. It's outperforming Bitcoin from a long-term perspective, because we're still not down to the December 20 lows, which is way down here, which is another 50% lower. So if anything, Ethereum doing pretty well. Ripple, XRP, obviously that's sort of like, there's a lot going on with XRP. Obviously there's the court case going on, and everyone talking about that going to the moon after it gets a positive reading. Or is that, I think that's Ripple, or it's Ripple, so. Isn't it? But yeah, that's looking pretty negative too. Other ones, Cardano, I suppose.
That's not quite broken through its support the same as the others yet.
But seems to be okay at the moment as well, holding on ever so by the skin of his teeth. But that's the sort of thing we've got going on in the cryptocurrencies. Not looking very good, and further downside expected, I think, this week. So oil, a big sort of market that people are talking about, especially in the UK, with oil prices at these levels having a direct influence, but not as probably direct as the government's taxing influence on the prices at the pump. So we're seeing petrol prices getting up to £2 a litre, which is something that
stupid,
is ridiculous. But my printer's printed something off. That's a bit weird. So what's happened over the last couple of days? We saw prices top out last week on the WTI crude oil at 121.30. Since then, we've had a couple of negative days, and we've had a bit of a negative follow through today. So yeah, really sort of like bulls will be looking at the 121.50 as the next target level to push up, and then after that we got the 126.43, which is multi-year highs, and we're sitting at support now, which is this is around about the low of last week. Yeah, is it last week? Yeah, all of last week's price action around about the 115.94 should find a bit of support here. We've got the 21-day moving average coming in at 113.65. Below that, we should have sort of some nice support at 108.70. On gold, gold has obviously responded pretty well to the market. The stock market's getting hammered, and there's a bit of flight to quality here. Obviously, the fact the interest rates are going higher, that won't be as a positive thing for gold. That'll be more of a negative thing, and so this is going to be bashed about over the next coming weeks and months. I think gold still feel there's more to the downside. We've got this channel formation that we're in. We're just flirty with the top of it. We've hit a 50% Fibonacci retracement level, broke through it today and have rejected and moved lower. Trading at 1864. 1875 was the level that we'd reached before there. We got up to 1878.5 this morning, and retreated from there with about 10 cents. Sorry, what did I say? 1878.5. We're about 14 cents lower than that now. So, sorry, $14 lower than that now. Trading at 1864, but still a little bit of support coming in the way of 1848, 1850, which is the 21-day moving average. Below there, 1832. But price action really needs to get above and close above 1875 to really start to focus on targeting the 1900 psychological level and the more bigger resistance levels above there. 1827 on the downside is the level to watch. Let's take a look at FX before we forget it, because Joe's not here. We always tend to forget it when Joe's not here.
Sorry, Steve. We did have a quick question regarding FX. I just thought I'd let you know on the TradingView stream. I'll read it out for you. With the inflation high on US dollar, I thought US dollar should have dropped, but still pumping. What do we think about that?
Yeah, I mean, well, inflation is always the big sort of like inflation is high. Yes, we know that, and there was no surprise on Friday with the inflation number. It surprised by 0.3%. But even if it didn't surprise by 0.3%, it's still a high inflation number. So there's no massive, huge. That bit you get that uptick. Let's take a look at what the price action did do. Well, should we look at the dollar index or look at euro dollar? Let's take a look at euro dollar over the figure, because the market sort of reads into this and it's expecting a bad figure. So sell euro, it sold euro, bought dollar over the figure. Here we can see it here. This is where the figure came out. Right here, bang, selling euro, buying dollar. So it was positive for the dollar because the interest rates are going to move higher, more aggressively. So if the interest rates move higher more aggressively, dollar becomes more attractive. Simple as that. So there's a big sort of this is where sort of interest rates in this market, in this sort of bear market or this high interest rate market, this is where you'll see currency moves happening as soon as sort of like central banks take action, or they're sort of deemed to be changing their mind, becoming more aggressive. So the US now looking at 3/4 of a basis point in the next month. That wasn't expected. So that is a sort of based on these figures. Now it's expected. Now we can sort of like see a stronger dollar. So again, stronger dollar should really impact gold on the negative side of things. But then gold's thinking about what the stock market's doing. So people are getting out of their stocks, the indices, putting it somewhere safe, saying gold, and you have that sort of small uptick in gold. But really, stronger dollar should be negative to gold. So that gets pulled about a bit as well. I hope that explains it. If not, I'll try and explain it in more detail.
No, good.
But that's trying to sort of simplify things, because I like to simplify things because I'm quite simple. Right, so looking at the weekly chart, so Joe's been away for a week and Eurodollar's been smashed. So he'll sort of like appreciate that when he comes back, because that's what he keeps saying. He's still in this sort of like downward trend for Eurodollar. On cable, similar sort of price action, negative, obviously, negative GDP as well from the UK. So recession, here we come, and we're back targeting really this 122.50 level. Obviously, we've got to really watch it if we do get below the 122.50 level. Sorry, 121.50 level. We've got support going all the way back here, which was a swing low 120.86, but that 120 level seemed to be pulling cable that way. And again, if all of a sudden the Bank of England turned around and said, right, we're going to be raising rates more aggressively, that would be more positive for sterling, and you'd see sterling sort of like fighting back, but nothing like that at the moment. Dollar yen, again, talking about it, 20-year highs. We've now hit this level that we saw back in 2002, going all the way back there. That's where we were trading, 2002. So if you got long there that day, you'd only have to hold it at 20 odd years, sort of like
to break even.
Back. Yeah. So what a ride in between. That continues to go higher. No sign of that slowing down. If we get any action out of the BOJ, any sort of like anything to sort of like look to adjust their currency, then we will see that pull back from there. But this is a nice little level for a gun to head trade, but it might not. You have to sort of, the timing has to be perfect. It has to be sort of like on the day, or as a on the day of a statement coming out from the Bank of Japan, to try and sort of like cap this dollar yen move. The yen weakness has just been incredible. Do they want it to stay weak? If it stays weak, then they're sort of like, their exports look really cheap. Maybe they're playing a little game with us. Diving on to the indices. So we got Dow, weekly chart on Dow. This is looking, like we've said for a long while, this looks like a real nice rounding top formation. Really sort of, if you think about where we've come since March 20th, this was locked down. So we got we were up 103% since March. So think about that for 1 second. Higher by 103%. We're now only higher by 70%. So we've had a 30% retracement from March. So that's still, I mean, if you think about where we were pre-pandemic and where we are now, it feels like we're a lot worse off. But the indices are telling us the opposite. Well, they're telling us that all the companies that are making money out of us are definitely not a lot worse off. But we are heading back to these real volume areas, which it's really key for me. I think we're going all the way down here, and I think it could be, it could take a little bit of time. Normally the sell-offs are a lot more aggressive than the rallies. The rallies take a lot longer, slower and longer, and you ride the wave, ride the bull wave, and you get your investment. But we haven't even had a 38.2% retracement from there. That's sort of like, let's get that on the chart now. Where is it? Just tell us where it is. Tell us what we got to look out for. Here we go. 38.2% Fibonacci retracement is 30,000. So we got another 1,000 points on the downside before we even get close to a normal retracement level. Now, even if it got 50%, sorry, Jamie, you go on, you jump in.
Sorry, I was going to say that 32 does kind of line up with that. I can't quite see the date, but the previous support from back in what is that, April of 21, and then the highs just before the pandemic started as well. So yeah, you'd probably expect to see some buyers come into the market at that point.
I would say so. You sort of like, I'll use your little rectangle tool that you use. See that. No reason why we can't sort of like target that. And if you look at the volume as well, that's where a lot of volume took place. So you will, you should get some buying interest around these levels. for obvious reasons, from the horizontal levels that we've seen in the past. That's where the volume took place as well. And you've got a 38.2% fib retracement, which is a nice retracement. I mean, even a 61.8% retracement isn't beyond the realms of possibility, and isn't really a sign that the market is even sort of like, that's just a normal correction in markets. So even getting down to 25,000 is normal. So, and it's things like that. The way this market extended, how aggressively extended over such a short time frame, this is a weekly chart, remember, is something that we don't see very, very often. And we're sort of coming back to normalized levels as far as I'm concerned. About time too. I've been boring people with my bare head for way too long. Been laughed at the pub and everything, Jamie. It's offensive. Here we go on Nasdaq. Similar sort of. I mean, look, Nasdaq. Here's a. Oh, I don't know why that's a trend line. That's hopefully got something to do with something else. But this is since 2008. Since 2008, look at what pumping money, what QE has done to this market. I mean, obviously, it's makes it look a bit more normal. Logging it, or is that logging it? That makes it look a bit more palpable, shall we say? But even this looks like, we need to get down to around about the 8,000 level. We're trading at 11,500. That sort of correction wouldn't be a surprise to me. And I think we're going to see things like that over the next sort of like 6 months. This sort of like volatile period we're coming into, where people are getting used to higher rates. The DAX as well. The DAX continued to sell off after Jamie tried so desperately to short it last week. Don't want to keep bringing it up, Jamie, but you were right. You were right. It's just all about the timing of everything. That's the thing we got to think about when we come up to our gun-to-head trade idea. I think about covered most things here. Jamie, if you want to show us what's going on in the stock market.
Yeah, it was an interesting week to finish off. Interesting Friday to finish off the week last week. But we'll jump in with our usual, what do I call them? Gainer and loser, biggest gainer and loser. Starting off today with Cogent Biosciences, had this nice 58.6% move. What are we seeing here? They actually surged more than 70% after the company reported positive initial data from its mid-stage trial of a big word in patients with advanced systemic mastocytosis and severe hematologic disorder. My brother will be laughing at me right now. He works in this type of industry and he will think I'm an idiot. Never mind. Looking at, I tell you what, we're going back to Box. We looked at this a lot last week and it's just been such a fool with no real sign of stopping in place. I think we looked at this, maybe four days last week. Bring out to a weekly chart and it really tells a much worse story. We can see the weekly move down on this was 70%, 69%. So, and starting at the day's highs and finishing at the week's highs and finishing at the week's lows. So, a really, really rough week, down about 20% each day. So it was a tough old time. Looking at our biggest loser though of the day, and we come to this Revlon Inc. What have we got here? Cosmetics maker Revlon is, I think that's makeup and stuff, isn't it?
Yeah,
is preparing to file Chapter 11 protection as soon as next week. Shares declined 46%. Did not immediately respond to Reuters' request for comment. So
that might be the sort of makeup your nan used to use. I think, from what I remember, Revlon. It used to be a big thing back in the 70s, 80s.
Right.
Yeah, haven't heard much of it.
Okay. No, well, it's certainly had a tough day last Friday. We'll jump into a heat map, and what we've got here is the weekly performance from the S&P. And I don't really need to say too much about this. You've got dark red across the board, and we know dark red is bad. Amazon was down 10%, Apple was down 5%, Google, Microsoft down 3 and 6%. It was a pretty horrible week, honestly. And we were saying on Friday how important the closes were. We were around some key levels, and a lot of those key levels were broken wide open. I mean, you've seen Nvidia down 10% as well, Wells Fargo down 10%. It was a pretty bad week in all honesty. And if we break that down just to the daily performance, this was the Friday performance isolated. Tesla down 3%, Amazon down 5%. Like, it was a bad day. Yeah. And we'll dive into a couple of the specific stocks to see what happened. I'll keep it on a weekly chart because I think the weekly close for a lot of these is important. So you can see on the right side of the screen, you can see the percentage moves down. I think this is just on the day on Friday. So let's look at a couple of the big ones. Start with Nvidia. Nothing too much there. This level here, this 61.8 fib, is still key for me, which takes us from, there we go, the pandemic lows to the all-time highs. So I think that's the key level to keep an eye on for Nvidia. What's Amazon saying? We've had a look at Amazon a few times. She's got this really big outside bar on the weekly. Not huge volume, so I guess that's one of the saving grace we could find there. But regardless, a really bad week. I think as well, closing at the low of the week's range is a really negative sign for me. But I think the level to watch with Amazon is, again, this, take it down to a daily chart, is this level we've got here, about 102. It seems weird saying Amazon's at like 109 after the stock split. But this kind of like 102, 103 level. If we get some closing below that, I think there's certainly scope for a move back towards this kind of 83 level down here where there was some support previously. What else do we look at? MU, we looked at this. I think we tried one more time to get long, not to be actually gap through it. We did say how important this level was that we were actually trading at. But yeah, like I say, gap through it. The volume started picking up as well. So I think for this, take it out to a weekly time frame, the next level we're really looking at is these highs here. And I think that is a pretty reasonable short-term target, in all honesty. If I was going to be looking to trade this, I'd probably prefer to look for a retest of this 66 level, because to me it seems a little bit overextended. I don't think you can get great risk reward trying to sell at these levels, but on a pullback I think you could get some quite decent risk reward in. We changed that to a resistance as well. There you go. So yeah, one to keep an eye on for sure. Microsoft, I mean, that's a really bad day, isn't it? Gapped lower and finished at the low of the day's range with increased volume. So that was a really bad day for Microsoft. We've been watching this two head and shoulders playing out. We've got the weekly head and shoulders you can see there, and the daily head and shoulders on this shorter term. Left shoulder, head, smaller right shoulder. Retest of the breakout level as well, which was a really nice potential area to get short. But yeah, this gap low, this doesn't look so great. If we start getting closes below these wicks here, that'll be the lowest daily close we've had since June of last year. So not looking good. We're putting in these lower highs and lower lows. So it looks like there's further downside ahead for Microsoft. Apple, similar story. We looked to try and get short at this breakout level. It didn't actually get back up. And similar to Microsoft, we actually ended up gapping lower into this previous support level, which we'd had drawn out, which is quite a pivotal level again. I think more so on a weekly chart. If we were to get a weekly close kind of below these wicks here, that would be pretty significant for me. But Apple's not looking so bad at the moment because we do still have this support here. We'll see if that can hold. Pfizer, we liked Pfizer last week. We could have shorted this twice. We're almost at the target now. Hopefully it doesn't do a Renault and sit there for ages. But that was quite a nice area to get short there off some bearish looking candles. Google, gap lower. I mean, similar kind of story. It's got a little bit more underneath again, but not looking great. Tesla actually held up relatively well compared to a lot of these stocks, but still putting in a series of lower highs at the moment. So we'll have to see where that goes from there. GME actually ended up positive on Friday, which is a bit of a surprise to me, honestly, with the rest of the market down, but it did hold up at this support level, which we have marked on. Obviously, there's other real factors that are the big drivers of GME, so one to keep an eye on. Volume was slightly lower than it has been too, so nothing too crazy there. We will leave it there today on the stocks. I think I had a quick check of the indices earlier as well, and I think they're actually down quite considerably in the pre-market, aren't they? They're down like, I think Nasdaq's down like 2%. I'll just quickly pull it up actually.
Yeah, it's 2.3%. Yeah,
2.3. So to me, yeah, you can see on this right side, 2.3%. S&P's down 2. So potentially some further selling coming today. Certainly from a technical perspective, I think that could be likely. But like we said earlier, these things are all about timing. Like it could happen in a few days. I was obviously trying to sell DAX all of last week, and then the day I stopped was the day I actually had that move down. So it's about protecting your capital. And making sure you've got good risk reward setups, because a lot of these, like I said, a lot of the stocks that we looked at are a little bit overextended, like Micron. So it's good to get the right setups that you look for, and not just kind of FOMO and try and short when it's overextended. So we'll leave it there today.
Lovely, thanks, Jamie. So next part of the show we normally dive into is the gun to head challenge. So this is the part of the show where we have a little bit of fun. That's my disclaimer. Have a little bit of fun. We're just going to pick a trade. We're not going to trade this trade. We're going to pick a trade live on air, and we're going to apply a stop and a target to it. We insist that each participant has at least a 2-to-1 risk reward on it. All ideas are placed at market, and we place them on our TradingView channel. You can check out all the videos that we placed on the channel over the last X amount of episodes. Trade ideas expire at 9 p.m. or when the stop and target is hit. So we can have a little bit of a look at how we did on Friday. We didn't do this last week because we kept having losers. So if we look at Jamie's gun to head trade idea that he called on Friday, he went short of the Nikkei breaking trend lines, looking for extended sell-off, and boom, bam. It only took a few hours, actually, Jamie. You were pretty quick.
No, I think...
is that after...
I don't think that's right. There was something weird with the chart on Nikkei. Perhaps if I pull up on mine what it should look like. Because I looked at it back as well, and it was pretty strange. Sorry, let me just share my screen. Yeah, so this is where Nikkei actually ended up with my idea finishing there at 9 o'clock. So we'll zoom in. So it actually at close we can move it along one. There we go. So that's where it ended up closing. So it was about good 2 and a bit %. But obviously it's finished that move now. But that's the aim of the game. We kind of close our trades at 9. So sometimes it helps you, sometimes it hinders you. But still, I'll certainly take being up. But I think you had a really nice move, didn't you, Steve, on your trade?
Yeah, I did. Mine definitely worked. I was following it, and it didn't quite hit the target, but the last hour sort of like got right back down to the lows. So I was going for a 5-to-1 risk reward. It looks pretty much 4.5-to-1, probably just around about that level. Happy with that. What to do now? And I see a few comments about the dollar yen, talking about bullish flag, and there's potential for that if it's a bullish flag that's already broken. Is that right, or did you see let's take a look at someone said like bullish flag and a 4-hour chart. Yeah, you could say that this may have been a bullish flag.
Yeah, potentially.
Like that, and it's broken. Yeah, and it's sort of. But the most interesting thing for me, really, thinking about where we are on the weekly chart. Here we are. There's the 20 years ago, 20-year high, and we popped our head through it. But also looking at a daily chart, something for me that's quite significant. These candles here. So these candles here, they look positive. They're green. They sort of like they sold off during the day, and then they were bought back. Sold off during the day, bought back. Now these are hanging man candles. They're not necessarily a good thing. They're sort of a sign that the bears are trying to sort of like move against the trend we're seeing, and it has been quite a significant up move. So I think there is a potential for a little bit of a correction, only a tiny correction. And I've looked at all the other markets, and this is the only one I sort of like feel a little bit confident in. Now the 4-hour chart for me, as you've mentioned, it's got lots of different formations on it, but the one for me now is this, what we're forming now. Now this closes at 10 o'clock, so we've still got an hour and a half in which the dollar yen could rip, and this won't look like this. So, but for me, the sort of like the formation I'm looking at here, that is an evening doji star formation. Now, if we are to continue this negative price action over the next hour and a half, and this candle is negative like it is now, or even more red than this, if it gets back down the lows, then that formation would be deemed complete. And then I expect at least 2 or 3 more 4-hour bars of negative price action, potentially maybe getting down to this 133.50 level. That's what I'm sort of thinking at the moment. So that's what I'm thinking I might go for. See a little shooting star, a little hanging man here on the 1-hour chart. So I might go for that. Maybe try and get down to retest this level. So this is my gun to head trade idea. I'm going to, obviously I'd like to be fading it up a little bit higher, but gun to head. Oh, let's here. Looking for a move back down to there. As I say, I'm not going for too much in this. A small correction. Thinking about just one thing to look at as well. I always look at the average true range of a market. Now, for me, the average true range of a market is pretty key. That's what you'd see on most days. So 1.25 points, 125 points. Today, we've already had, what have we had? A 90 tick range. So from the high to the low, there's probably not much more on the downside on a day, but this is the only one I can see at the moment. So I'm going to go for this against the trend, against the long-term trend, which is never recommended, but I'm going to sell dollar yen, double click on it, at 134.73, targeting a move to 133.26, and the stop is at 135.30. So it makes a new high. I've been stopped out. That's fair. I'm happy with that. I don't want to be holding this as it sort of continues higher. So that's my trade idea.
Nice, Steve. Yeah, looks good. Right, I'll jump in with mine. I was kind of struggling as well. There was nothing I loved today. Obviously, the indices have really been struggling. We can see in the pre-market a lot of them struggling. But I pulled up the FTSE and I'd pre-drawn this support level we have here at 7220. On the daily time frame, you can see it's touched it back here, it's touched it here, it's touched it here, broke through at this point, but it found support again. We've had this obviously quite a key move down from this resistance level we had with not a lot of respite, so I'm pretty much hoping for a temporary move higher, a bit of a correction. Certainly I don't expect kind of a V-shaped bounce here, but to me this is kind of, I mean, there's not a lot looking great right now. But I feel I can get some decent risk reward on this. So I'll bring it to a 4-hour chart. We will look to get long on FTSE, and obviously this is a very ambitious trade, but we can get long of it here at 7233. 7233. There we go. We're going to have our take profit. We'll target these kind of swing lows. These, prices kind of found a bit of support and resistance around this area. So we're going to target actually a little bit higher. We will target there 7431. There we go, and we can have our stop just below this level here. So yeah, this is highly speculative for sure. Having our stop at 7152. So we get 2.44 risk reward out of that. Very speculative idea, but just looking for a bit of a bounce following this extended period of weakness on the FTSE today. So that is our trade of the day.
Nice one, mate. So just to finish off, what we're looking for day ahead, we've got the UK labour market report out later. Key events this week, we've got US retail sales on the 15th, Federal Reserve policy decision on the 15th, Swiss National Bank and Bank of England on the 16th. So we've got Wednesday and Thursday pretty busy with central bank decisions. Let's see if they're going to be as aggressive as the markets are showing us at the moment. So yeah, thanks for joining us today. I hope you found the show informative. Hope it's been helpful. Feel free to drop us a like, ring our bell, or just sort of ask questions live on show. It's great when it goes live streaming. We've taken up a lot of your time, so apologies for that. And we'll look forward to seeing you tomorrow. Joe may be back tomorrow. He's flying overnight back from Cyprus.
Nice.
Safe travels, Joe. Hope you're get back nice and safe tomorrow, and you can join in the fun.
Join in the fun.
Cheers.
Bye bye.